Hi, Preston. Thank you so much for being the first guest on Hard Money.
Hey, I'm honored. Great to be here.
All right, so let's talk about this craziness happening in the macro environment. What are your thoughts? Bitcoin is crashing. People are nervous. Tell us what your reaction is.
Well, I would break it down into, I think for a lot of people in the space that are just looking at Bitcoin itself, they might be looking at the Celsius and the Luna thing and kind of frame it from that lens. I would tell people to view out, to zoom out way further than that and look at the currency markets and kind of see what's happening more at a sovereign level with the bond market and all these inflation prints. Because I think that's the thing that's really kind of condensing and applying a lot of pressure. And you're seeing that spill over into some of these crypto exchanges and tokens and things like that blowing up. So to really kind of narrow in on what I think are some of the critical factors on that really large macro lens, the currency, the dollar, is just like bidding to the moon right now against all the other fiat currencies around the world. And you're seeing that because the Fed is tightening. They're actually conducting quantitative tightening now. Rumor coming out that they're going to do a 75 basis point hike. And then in the background of all that, over in Japan, they're doing yield curve control. So when you have these other central banks that aren't tightening, and in fact, like in Japan, they're loosening aggressively, and you have the dollar and the Fed tightening, it's like a double whammy that just makes the dollar so much stronger. And so this is just creating this dynamic that any dollar denominated debt in the world is getting extremely difficult to repay, especially for these countries that have to swap in their local currencies into dollars to make good on their promises. And this is just creating an enormous strain on the global economy.
You know, Bitcoin was finding pretty good support around that 29,000, 30,000 range. And then wham, we got hit so hard this week. Who is selling, Preston?
Well, I think that most of this is due to the Celsius more recently here in the last couple days, the last couple weeks. You just have people that are not like you and me that are only in Bitcoin. They're in all these other things, to include traditional financial markets as well. And so when you have a portfolio that's constructed with all these other positions, and then they have counterparty risk potentially associated with them, they have to be sellers. You have to sell your winners in order to adjudicate your losses and where you've been compromised in other parts of your portfolio. And when you look at the size of Celsius alone being a $20 billion platform, and then stopping withdrawals, and then you look at Luna, and I want to say it was a $60 billion market cap, and it goes to zero. That has an enormous amount of strain for all these other people that are participating in these markets that have counterparty or have additional positions in their overall portfolio.
Preston, so many macro analysts say that the Fed is going to continue to tighten until something in the system, quote unquote, breaks. Are we close to that breaking point? And what do you think it's going to be?
So this is the hard one, because you really don't know what's going to really kind of be that thing. I know there's some people talking about the commodity houses are going to be the things that really kind of rupture. I think the whole Japan trying to peg with their yield curve control, it seems like they're struggling to keep the yield pegged at, I think it's a quarter of a basis point. And just imagine how insane that is, like just trying to keep that pegged. And so like what pops out of that, I don't necessarily know, or when. In the meantime, the dollar is going to keep getting stronger. And I mean, that's really kind of, if you got free cash flows, that's kind of the place to be, is to be stacking the dollar until they reverse course. And then when they do, obviously, I think you need to go long Bitcoin. But in the meantime, you don't necessarily have to know when that's going to happen. You just got to kind of understand the critical point, which is going to be a headline to the tune of central banks around the world globally coordinate $10 trillion stimulus package because X broke. And that's going to be kind of the point that, and obviously the numbers could be whatever, but something on a very grand scale is going to be the point where you go from kind of stacking in your free cash flows and fiat to really kind of stepping in significantly into I would say Bitcoin, all the other stuff, in my humble opinion, is junk. But that's for other people to debate and to argue about. But
well, I know you follow bonds very closely. So talk to us a
mhm.
little bit about bond yields. We've seen an inversion in the 5 and the 30. Sometimes
Yeah.
this is a leading indicator where we see the economy rolling over. So talk to us, what do we need to know about bond yields and maybe how that plays into this whole thing?
Yeah, I would just frame it in general. We saw quite a bit of an inversion earlier. I want to say maybe 3 months ago, and then it got back into kind of normal, uh, where your long duration stuff was on the top of the curve, and your shorter stuff was at the bottom. But now it's scrunching up again, and whether that's going to continue to persist, I don't know. But what it's showing you when you see the bid on the shorter duration stuff, it just shows you people need cash in order to adjudicate their impairments. And so we're watching collectively the bond yield curve is selling off like crazy. You're seeing the yields go higher, and the reason that this is happening is because we just got an inflation print of 8.6%. I think a lot of people were expecting this month and even last month for the demand signal to really kind of dry up, and for people to not have the cash in hand in order to keep spending the way they have been. And I mean, there is a bid for anything scarce in the commodity space: food, fuel, all of that stuff. And so as long as that continues to persist, you're going to see this fixed income market continue to sell off and make a run at trying to put a premium with respect to yields over that inflation number, until you see the inflation number, potentially chase back down to where the yields are at. So you're going to continue to see this sell off. Everything is priced based off of yields, and the foundation of these yields is inflation itself. So you got a negative 500 basis point spread generally speaking, between sovereigns and inflation. And boy, oh boy, that spells sell off in a major way.
Well, so many people have concluded that in the end, they always print, right, Preston? So is that what
Yes.
it's going to take for Bitcoin to go back up? When are they going to print?
Yeah. I mean, I don't see Bitcoin having any type of meaningful recovery where you're making new highs or anything like that until you get into, not only have they reversed course, they're adding tons of liquidity back into the system, and then you're going to need a little bit of time for that to kind of settle into the broader economy before you're going to start making new all-time highs. So you got some time that's going to have to take place here before something like that's going to happen. In the meantime, as you're going through these deep corrections, you're having the consolidation of Bitcoin into really strong hands, and into hands of people that are just clawing it off the market. And those Bitcoin will never be put back on the market ever again. That takes time, because those types of buyers, I'd consider myself a buyer like that, where I'm clawing them off the market and not to put them back on ever again. A lot of them are waiting. They're waiting for this bottom to kind of set. They're looking for the Fed to pivot before they kind of step in with their free cash flows to gobble it all up. But when they do, they're gonna be hardcore hodlers, and that's the thing that really kind of drives the next big market move. So it's all part of the process, right?
Well, on the positive side, this could be a good entry point, accumulation point for many investors. But what do you say to the people who came into Bitcoin when it was 40, 50, 60K, and they're really sitting in the red, and maybe they do have expenses that they need to pay for? What do you say to the people that are just nervous in general?
I can understand why you're nervous. If you really want to try to not be nervous, you got to really wrap your head around how credit markets work, and that is a major hurdle, education hurdle for a lot of people, to kind of understand how these cycles move, especially when you're getting into what I would describe as a currency failing situation. The fact that the dollar is up this much against all the other fiats isn't necessarily a good thing. It might be for the people that are holding dollars and maybe spending internationally, but this process, this thing that we're going through, is something that takes years to kind of play out. And you have to have the patience. You have to understand how credit markets work. You have to understand how currencies work and fixed income markets, all that kind of stuff wrapped together to maybe have some calm in how you're viewing the current situation. So if that's not you, and you're looking at this and maybe you are in the red because you were maybe, coming into this at the tail end of the last bull run, I would tell you to the simplest way to do it is just dollar cost average. You don't have to you know, knock the ball out of the ballpark to really have an impactful position. And I would also strongly encourage people to not have such a ridiculous position size that they lose confidence in it. So you don't need a huge position size at these current prices and where this is potentially going for this to have a really meaningful impact in your net worth and your your portfolio. So I would tell people to kind of step into it slowly to dollar cost average. So you're not playing around with the market timing because most likely you're not an expert in credit markets, and just kind of just bite a little bit off at a time and kind of stay with it. And that would probably be the best advice I'd have for people.
No, that's great advice. DCA and check out your work for education on the credit markets. Thank you so much, Preston. Really appreciate it.
My pleasure. And thank you for having me, Natalie.